Hi, welcome to the Real Estate Market Watch and Mortgage Market Update. I'm Bob Gibbs.
And I'm Michael Caires.
And we're in the middle of March 2025. The year is just screaming by and starting into spring.
Yeah.
Yeah.
Spring training is almost over.
Spring training is almost over.
First pitch in 2 weeks.
Yep. High school baseball is in full throttle.
We had a game yesterday. Extra inning affair.
Yes, tons of fun. So we wanted to bring you up to date on what's going on with the real estate market and with the mortgage market. So with real estate, have a lot more inventory than we did last year at the same time. Really, we're about 40% more than we were last year. Now that's nice, but we're still less than our average. But it's trending in the right way.
Yeah, lots of activity on brokers tour.
Yeah, a lot of people out there. We're seeing a lot of homes really that are priced well and look good, selling with multiple offers.
Yes.
And we're seeing a lot of buyers starting to come off the shelf and off the fence to start to get engaged. So
I think a lot of people are adjusted to the environment. Interest rates went up so rapidly over a short period of time. I think it kind of shocked everybody. And we've seen them work their way down last year to the current levels.
Right.
And hopefully, that's going to continue that trend.
Right. I know there was a Fed meeting recently.
Yesterday, the Fed held rates, which was widely expected. Kind of taking a step back in September. I mean, the Fed was full go, in a cutting mode, and they did 3 meetings in a row, 0.25%. But during that same period of time, I think they missed the mark where the employment situation was much stronger than they anticipated. Inflation was coming down, but not as much as they thought. So they put the brakes on things, and the can has been kicked down the road. However, I do see something happening later in the year, resuming. It's going to have to resume. So now it's a question of when. If I had to guess, I'd say as early as later this year, where they start ramping it up, the cuts, and into next year. And, we're in the sixes, mid sixes, which is definitely better at this time. Last year, we were talking about 7%. So we're definitely in the right direction.
Right.
And wouldn't surprise me over the next 12, 14 months that we see rates below 6%.
Yeah, I think when that happens, we're going to see a huge shift in the market, and it's going to become very, very active.
Yeah,
I mean, it's starting to become active now, even in the mid sixes to high sixes. So if we get down in the low sixes to high fives, I think that's going to be a trigger for a lot of potential sellers to say, And
as a buyer, I mean, I think I'd want to beat people to the punch. So as things start to happen, I would make your moves so that you're not, you don't have as much competition.
Yeah, and there's always, they always have that saying is you marry the house and you date the rate, right? And so if you find the right house, that's actually the key to what you need to do is find the right house. If you find it, don't wait. Just get into it because you'll be kicking yourself later. I can guarantee you that.
Yeah, anybody who's bought a house in the last 10 years in our immediate East Bay is not complaining about owning a house.
No. So we're seeing things change pretty rapidly these days with the new administration coming in and, the tariffs and things like that and the impact on the economy. So it's good to stay in touch with us. If you want more frequent interaction, you can reach out to Michael or I, and we can have a one-on-one discussion about your specific situation. But for now, thanks for watching.